Hey, everybody, and welcome to the latest edition of Crossing the Line with Greg Heym. I'm here with Lone Daddy himself, Scott Nadler, looking very buff today.
Couldn't let you be the only one with a short sleeve shirt.
Well, you know, it is a little chilly in here, though.
It's chilly in here, but it's not. It was
hot out.
A very hot walk over.
Yeah, my son graduated high school 2 Saturdays ago, so we had a lot of family in town. And,
yeah.
You know, Monday and Tuesday.
Congratulations, by the way.
Oh, thank you. He did most of the work. You know, we were at Jones Beach, and on Tuesday, I've never had my feet burn like that from sand. Like, it was so hot, you couldn't even walk.
Yeah.
You had to run to get in the water and then run to get back out. But, you know, things have cooled today. I think it's only like 80-something degrees.
It's nice today. So it is. We'll
see how long that lasts. So, how was the weekend? Anything?
Weekend was good.
What did Scott do that he didn't invite us to do? We got Lena and Ray here as always. Say hi to the folks so they know you're real, that you're not chatbots.
It was a fantastic weekend. It was relaxing.
When isn't it a fantastic weekend?
Weekends are great. I've actually been working a lot these past couple weekends, which is good. But I did have some time. I've been reading Andre Agassi's autobiography, which is fascinating.
Now, Bess recommended that book.
Did she really?
Yeah, she recommended it.
So
write me some cliff notes, and then, you know.
You don't need to read it, yeah.
No, like, I remember the Agassi era. You were like in diapers maybe when he was winning, but it was a change in, like, he wouldn't go to Wimbledon because you had to wear white, right? Yeah. He had real problems. You know, he dealt with drug addiction.
He hated tennis. Yeah. That's like a big theme of the book. He was forced to play. And he talks about, I mean, they go into the relationship that he had with Brooke Shields. He had a very close relationship with Barbra Streisand, not in a romantic way. They were just friends. But it's a fascinating story.
You know, it's funny. Curtis Martin, the Hall of Fame football player, same thing. He didn't like football.
Yeah.
It was his way out of Pittsburgh, I think, where he grew up. And he way to a better life. He just did it as a job. Now, of course, we love our jobs, right? We never want to do anything else.
He also hated being famous, Andre Agassi.
Well,
he just said, like...
He was everywhere. The Canon commercials.
Image is everything.
The hair.
So the hair also, he had hair I guess, like, hair plugs put in there for a bit, and then eventually had them taken out. But he was losing his hair early.
Yeah, he went from like mullet to bald in warp speed.
Quickly.
You got that, Gregory? I'm trying to remind my son that the hair doesn't always stick around. Well, that's interesting. Yeah,
fantastic book.
I'll wait for the movie. You gotta have
it. You gotta probably keep waiting. Okay. I think the book's been out for 15 years.
Is it? No,
if Bess recommends it, though,
I just tell her I read it. Yeah, it was great. I'm too busy reading other things these days. But, all right, so that's good. So we're coming to you, as always, from Studio 1873 with our home, which we love. And we'll start the actual program right after these important messages.
Your dream home is closer than you think. I'm Scott Nadler, VP of Mortgage Lending at CrossCountry Mortgage, and I'm here to get you the perfect loan to match your perfect home. From first-time home buyers to seasoned homeowners, I've helped clients make their moves with confidence. Ready for a smooth, stress-free home buying experience? Let's get you moving today. Call me and let's turn those dreams into keys.
Sedgh & Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
So from an economic data standpoint, the biggest news was PCE, personal consumption expenditures, where that price index is the Fed's preferred measure of inflation, the core PCE index. And it came in a little higher than expected, up 0.2% in May and 2.7% from a year ago. It was each 0.1% higher than expected. Not the best news, not the worst news. There were so many other things going on last week that, I think people said, all right, that's not so bad. And remember that CPI and PPI were lower than expected.
It was enough, though, to push the bond prices lower and the yields higher.
Right.
And we had so much positive momentum over the last couple of weeks of rates starting to come down. Yeah. Not in a life-changing way, but we were seeing a steady decline of rates dropping. And then this report comes out and puts that on hold. And Look, PCE, as you said, is the Fed's preferred measure of inflation. I don't see PCE dropping too much until early next year, because if you look at June to December of 2024, the PCE numbers are really low.
Right.
So when you're replacing...
So you look at year over year.
Year over year.
Right, that's what they're warning about. The year over year comparisons are going to look scary.
Exactly.
But, you know, I guess...
But to your point, CPI and PPI have been dropping too. So
Right.
taking all that together, how much of an impact is this actually going to have on the markets?
And the reason that the Fed zeroes in on PCE and why we care about it is it's more complete data. Comes out later. Mm-hmm. But we don't really talk about the two other things that are in there, which is income and spending. Mm-hmm. Because, again, if I can't afford steak anymore because the price is too high, I'm going to buy chicken. That shift and that behavior isn't incorporated in the CPI data. Here, they get the actual data on spending so they can better weight each product. And, you know, that's important. But so what may have mitigated some of the concern about inflation picking up was the information on income. Personal income fell, you know, it was expected to rise. It fell significantly. Now, some people have pointed out that may have to do with Social Security payments going away, and it's a temporary thing. The wages and salary number was pretty solid. And spending, which was negative, which isn't so much a surprise, although people were looking for a little bit of a positive gain there.
Yep.
So they both disappointed big time. But again, I guess people say, well, it's 1 month. You know, let's see where it goes. Maybe that cancels out the worry about the price index being higher. Plus, there was investors kind of ignore this. Like they move on to the next thing pretty quickly. And, you know, even the idea that we stopped the trade talks with Canada over a charge that is now going to go away. So that probably will start talks again. The S&P 500 ends, you know, at a record high on Friday.
Think about the lows of April to where we ended on Friday. I mean, it's a big jump, and it made me think of, you've probably heard this before. There's this story of a Chinese farmer where this Chinese farmer has a horse, and then the horse runs away, and his neighbors go up to him and say, "What a shame! This is so terrible. You lost your horse." And the Chinese farmer says, "Maybe." The next day, the horse comes back with another horse, and they say, "Wow, this is so amazing. You have 2 horses now." And the Chinese farmer says, "Maybe." And the next day, his son is riding that second horse and falls off and breaks his leg. And they say, "Wow, what a tragedy. Your son was riding the horse and broke his leg." And he says, "Maybe." And then a war breaks out. And all these able-bodied men have to go to war where thousands of them are killed. And his son cannot go because he has a broken leg.
Okay.
And so it just goes to tell you that all this hysteria that was going on in April, where people were selling stocks and saying that the world was coming to an end and these tariffs are going to blow everything up, we're 2 months later and we just saw record highs.
And because the stock market has no memory. It's all about the future. And the interesting thing is we got another announcement about a deal with China and the U.S. And you go, wait, I thought we had a deal already.
Right.
Is this the whole deal? Why aren't we happier? Why isn't the stocks, you know, hitting the moon? And you know, the deadline is coming up. The 90-day pause is ending in a little over a week. Where are the deals?
Right.
You know, it's like the old commercial, "Where's the beef?" Like, where are the deals? And they're like, they're coming. Don't worry. Or don't worry about it. We're just going to send letters. This is the latest I've heard, saying, we're glad to let you bring your stuff in here. Here's what it's going to cost, kind of thing. But so as happy as we are with the S&P 500 and how U.S. stocks are doing, they're actually lagging the rest of the world. This is an interesting piece that we found out about. So the S&P 500 is up 5% this year. It's been an amazing recovery, like you said, since April. But, you know, compare that. South Korea is up 37%, Germany up 28%, Mexico up 27%, Hong Kong up 20%. Scott's volume down 5%.
100%.
So foreign stocks on average about 15% higher this year compared to our puny 5% increase. But that can continue to change very quickly. I think it's you see that once the turmoil goes away, things can correct very fast. And that's why, not that I solicit people to ask me for financial advice. I say the one thing you do when the market's plummeting, you don't do is sell everything.
Right.
If you need something, sell it, but don't sell, because if it's something that can change quickly, like a pandemic, then things can recover very fast. And we certainly saw that. We also got good news here in New York and other high tax states that the SALT cap, it looks like it will be raised to 40,000. It may change. They're trying to get this thing done before Friday. I don't know if it's going to happen. But they seem to be pretty sure they have a deal. So we'll see. I mean, there's still people that don't care about the SALT cap. I mean, it's really a thing for 5 or 6 states, right? I mean,
this being one of them.
Right. And does raising at 30,000 make a huge difference to the housing market? Because one of the things I point out is you think of the areas you thought were going to get creamed by this, like the suburban areas, Long Island, Connecticut, New Jersey. Prices have never been higher in those markets. Now, that's about shortages, but still.
And COVID also. So the changes made in 2017. Obviously, COVID happens in 2020.
Right.
So we saw a big uptick in home price appreciation at that time. I think this can make at least a psychological difference.
Oh, and I think it will help kickstart sales for a while. It's just, like you said, it's hard to know because COVID really is the reason behind the shortages and the run up in prices. But they're still going up.
Yeah.
I'm shocked what my home is allegedly worth. It's interesting.
That's because people know
it's Greg Heym.
Who's actually living there. Yeah.
Nobody knows. I live in secrecy. My neighbors would never tell. No, I would say I'm in the phone book, but I good luck finding a phone book. These days.
I'm sitting on one right now.
That is true. We make them do that. But, by the time we just finished that sentence, somebody just Googled my name and is probably headed to my house right now.
Yeah.
You can laugh
Hopefully
at the
not.
sign. You can laugh at the sign of my son. All the seniors, you get this thing you put on your lawn. And my son's high school yearbook photo, he has a mullet. I said, you're going to regret that. Your kids are going to see that when they bring out your high school yearbook.
I disagree. So I have a friend who got married a couple of years ago, and he purposely had a mullet for the wedding because his father, his grandfather, and his great-grandfather all sported a mullet in their wedding photos. So he's following the...
Okay, I did not have a mullet in my high school. I had hair, but I did not have a mullet.
He's starting something then.
I don't know. We'll see. I don't know if he knows what he wants to do anymore. All right. So we get big data this week, the jobs report, which is coming out a day earlier because Friday's a holiday. That's going to tell us a lot. But one thing we did get last week that was a little scary, we get the weekly unemployment claims, right? Yeah. And there's initial and continuing. Initial claims were down slightly. So you say, well, layoffs don't seem to be picking up. What's concerning are continuing claims, which hit their highest level since November of 21 at just under 2 million.
Right. And I think this is going to be interesting how the Fed is interpreting all this. It's like one of those, what do you call it? A Rorschach test. Because you had Austin Goolsbee, you had Bowman, you had Waller come out and say that they should cut rates. Powell's still on the fence.
He's still using that tariff excuse. Like
they're still
while he's thinking about his $2 billion renovations to the Fed's headquarters.
Exactly. But when it comes to employment, the BLS numbers have been very strong.
Yes.
The revisions
have been very strong.
Have been very strong as well. But then you have the continuing claims. So it depends on kind of what lens you're looking at the market through, because there are some voting Fed members right now who are coming up pretty strongly about cutting. And again, you could still be restrictive and cut 0.25%. So I actually do think they are going to cut a quarter at the next meeting. But
next month, in July?
July.
You're the only one.
I don't know if I'm the only one. I think there are a couple of Fed members who are saying it.
Well, they're saying it, but the odds are still September.
So, and that's also interesting because I feel like, and we talk about this a lot in terms of the Fed actually cutting or raising rates, how that doesn't have such an impact on mortgage rates.
Right.
But it seems like the dot plot does. The expectation as far as what they're going to do does have an impact on what happens with rates. So that's something that, and look, we learn something new every week. That's something that I kind of picked up in the last week of just looking at what the Fed members are saying and how that's impacting rates.
Right. I mean, these are the people that make those decisions, so they should.
So it's
they
not
should
what
have
they're
an
actually
idea.
doing; it's what they're forecasting to be
Right.
done is having an impact, which I think is really interesting.
It's funny when you look at the PDF of that. It is in a font that looks like it's 200 years old, like it's something done on a manual typewriter or something like that. It's very unpleasant to look at. They should make it more user friendly.
It's time. I think they're using a lot of outdated programs over there.
The BLS too. Their
BLS for sure.
Press releases are very unappealing. The charts are pretty terrible. They haven't changed since I was there 30 years ago.
Right.
So here's something interesting. I went back and looked at the May jobs report because in there you have the household survey and they have data on unemployment. So are people staying on unemployment longer? According to the May jobs report, that's not true. So the median duration of unemployment in weeks went from 10.4 weeks in April to 9.5 weeks in May. So that now maybe June had a big turnaround to it. Who knows? The data can be a little wonky, which isn't really an economics term, but we'll take what we can get. I wish the JOLTS report, didn't lag so much because that getting more real-time data on openings and turnover and what's the cause of the turnover, are people getting fired, are they quitting? That would give us a really good picture. But unfortunately, and this weekly claims for unemployment is also something that has to be watched with a little bit of caution. Weekly data
ADP is also vastly different from the BLS numbers.
Why would they all be the same?
Right.
The two numbers in the same BLS report. You have the household survey numbers in the pair. Then one was negative almost 700,000. The other one was
people focus on they want the reports to confirm their pre-existing beliefs. It's like if someone loves wine, they're going to find the reports that show wine is really good for you. The people that are against it might show reports that say wine's going to kill you.
If wine's really good for you, I had a very healthy weekend. Right, Lena? Don't we love wine?
We do, yes.
She's drinking right now.
So am I.
Yeah, that's why camera's not on her.
So, all right, we're gonna go on to housing, but first we have to take a break. But then I was shocked at how many bits of information we got last week. And here's the teaser: they don't all add up.
What do you really need to know about buying or selling a home? First, it's serious business, and it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
Hi, I'm Evan Greenberg with Langdon Title. I specialize in title insurance across New York, helping real estate attorneys, agents, and brokers close with confidence. I solve problems fast and keep your deals moving. Contact me anytime.
All right, we're back with Loan Daddy. If you don't believe me, the hat says it. He's got to be Loan Daddy.
Correct.
It's funny. I'm looking at the dot there. So a couple of my nieces and nephews were in town for the graduation. And my one niece was yelling at me because I actually put periods at the end of my texts.
Yeah. Oh, yeah. Gen Z does not like that.
No, and she's yelling at me about this. She's like, it's like you're putting a stamp on it. It's like, period. And she's like yelling at me. So now when I text her, I write the word period after it just to be that much more.
I sent that to my cousin, a text message with a period, and she wrote back, "Are you okay? Are you mad about something?" And I was like, seriously?
It wasn't an exclamation point. It's a period. Like what? What I said to her is I use my phone primarily for email.
Yeah.
Because I'm old.
Yeah.
But, and it's just habit to hit the space two times to put a period there.
Yeah. You got to keep up, Greg.
So now I just use the emojis too. She's like, you
just
sent me one more
in
thumbs
emojis.
Up.
That's
I'm
it.
like, it makes the point.
Yeah.
All right. So I'm looking at the dot there. It just. Hi, Rachel.
That's in the middle, so it's more of like
it's not at the end. Period.
A tech thing.
So
makes it techie.
So we got existing home sales for May from the National Association of Realtors up a little less than 1% from April, but they were expecting a decline, so that's good. The interesting thing is supply is up 20% year over year.
Yep.
So you would expect that you'd see a little more of an uptick in there. But, you know, you take what you can get. The median price hit a record level for the month of May. That's what they're doing for headlines now. It's not a record level. It's a record for the month of May.
Correct.
$422,800. But that's up just 1.3% over the past year. So there was another article about that. The case Schiller came out. So we're seeing slower price growth, right? But that's what we call inflation. Prices are still growing, but at a slower pace. So it's disinflation at this point, right? Not deflation. But here's another interesting thing, and then you can give your take on all this. 28% of the homes that sold, remember this is based on closings, closed for above the list price, up from 18% in April. That's a big 1 month jump. And homes taking a little bit longer to sell.
Yep.
So based on your business and what you see, does this make sense to you that things have ticked up a bit, but it's not swinging full force yet?
Things definitely taking longer, for sure. And I think that's kind of been the case, but now maybe it's taking a little bit more. It's what we've talked about before, the uncertainty, the job security, the talk about inflation, interest rates, obviously. I think all these things combined are causing people to pump the brakes a little bit. And the longer that things take, the more time it gives someone to think about something and rethink about something. That's not good, right? Time typically kills deals. And I could tell you here in New York, it takes time for contracts to get signed because it takes a long time for management companies to come back and get the documentation that's needed to check on the building, whether it's the financials, the questionnaire, the insurance.
Call boards have to meet, and you know it can take forever.
All that stuff.
Yeah.
So the longer that someone has to think about it, meanwhile they're hearing about the world falling apart, and they're seeing colleagues of theirs getting laid off potentially. It causes people to
not the time to make a very large purchase.
A big purchase, exactly.
So. All right, so that's existing home sales. Again, they're counted when they close. New home sales also came out. They're counted when contracts are signed. They plunged 14% from April.
Yeah.
So what's the difference? Well, between when the contracts were signed for the May existing home sales and the contracts were signed for the May new home sales, rates went up.
Yeah.
And, you know, so that is a big part of it. The supply level is now almost a 10-month supply, which is, you know, a heavy buyer's market. So get out there and buy a new home.
Right.
And their inventory is up 15% a year ago, the highest level in 3 years. So there's opportunity there.
Right.
I mean, typically new home sales tend to be more expensive. So, I mean, new home sales here are a different animal because we're talking usually about luxury condominiums, right? But, you know, what do you think of this? What do you tell someone if they come to you and say, Loan Daddy, how am I supposed to know if the market's hot or not when the existing home sales seem to be selling decently, new home sales, nobody's buying them?
Yeah, I think every area is kind of acting in its own way in terms of, is it a buyer's market? Is it more of a seller's market? In terms of new sales, though, there's more inventory coming onto the market, which people are excited about. But again, I think it goes back to the overall uncertainty of how people are feeling. You know, whether it's an existing home or a new home, that doesn't change anything. Right. It's just the overall psychology of the buyer today is one of uncertainty.
There's never certainty. We say this all the time. Now here in New York,
it's just in our faces a lot more now.
We just got hit with another bunch of uncertainty with a contest thing that is you know, concerning people. But you can find uncertainty in every aspect of your life, you know.
1,000%. And
the more the noise gets ratcheted up, the more I think you want to be out there trying to find the best deal. We've been talking about embracing the chaos. I know easier said than done, but you know, if you find a place that you love and you're going to stay in, you're not going to regret buying it.
You want to buy in a buyer's market. It's a good time to be a buyer.
I bought in one of the biggest seller's markets that's ever existed in 2006, and I'm not upset about my purchase at all. I've also got to cut the rate, you know, by more than half, so that takes a lot of the sting away.
Yeah.
But I think you can't make long-term decisions based on current events.
Yeah, and there's so many opportunities right now.
If you're worried about your job, I get that, and layoffs are still pretty low, but it does seem, and anecdotally, some people I know that are out there looking, it is taking longer. Now, maybe we're back to more historically, expected levels of unemployment where, people used to quit their jobs and before they packed their stuff, they had another job. It's not working that fast anymore because companies have to live with that uncertainty, right, with tariffs and what that may mean to their business.
Also, your company may be fine, but the industry that you're in may be down. So now you're thinking worst case scenario, if something goes wrong here, that could impact me. But again, in markets like this, there are so many opportunities out there. I mean, we're seeing homes that are sitting on the market for 3 to 4 months. You as a buyer have an opportunity to make a competitive offer to that seller who needs to sell that property potentially. So, working with your real estate agent, Shar is at a closing right now, so things are happening.
Yes, he says hi to everybody.
He says hi. He wishes he was here.
He's out making money.
But again, I think working with the advisors who really live this day to day and not relying on someone who has a deadline to write an article for some publication is going to benefit people. It doesn't mean it's right for everyone to buy right now, but there are some people on the sidelines that should be buying.
Well, and again, it's a big decision to make, but even when things are good, it's still a large purchase and a risk. There's risk involved in it. So then to finish this trifecta of real estate data, we got pending home sales. Now, pending home sales are existing homes that went into contract. Mm-hmm. So they were up almost 2% in May, but the reason for that was April had posted the biggest drop in 3 years.
Yeah.
So you're coming off a weak number. So the comparison month to month doesn't look so great, when you take that into consideration. And, the pace of home sales are slow, about 4 million a year. They always look at the annual rate. How many would you sell in a year at this pace? Pre-COVID, they were over 5 million a year. So that's a big difference.
Yep.
And inventory was higher.
And I think that was the slowest pace since 2009 for May.
Yeah.
Which is
it's
a
just
big deal.
It's incredibly slow. But Scott's going to tell us how that's all going to change. Is he? I don't know. We'll find out
it's a fantastic tease.
After this message.
Ultimate Diamond is New York City's most established family-owned jeweler. With over 65 years of experience, Ultimate is renowned for its exceptional, custom-crafted diamond jewelry, its bespoke engagement ring designs, and its ability to source rare, distinguished timepieces. Ultimate has built a legacy of timeless craftsmanship and discretion, making it a trusted name among those who value refined luxury. Learn more at ultimatediamond.com.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
All right, and we're back. So let's close talking about mortgages and rates. And rates,
my favorite topic.
A few of your favorite things, as the song would go. So rates fell for the fourth straight week, and at 6 3/4 roughly, lowest level since early May, which wasn't that long ago. So I don't know if we celebrate that. But a year ago, rates were about 10 basis points higher. So we can celebrate that. Mm-hmm. But what are you seeing right now? We talk about rates being in a narrow range, and that's more of a steady thing. Or did they get mad when they saw them going up in May, and now that they're a little happy they're coming down, but not happy enough? Are they getting to that point where they say, "Loan Daddy, call me when they get down to 6.5"? Are you seeing any of that?
No, I think it's been in this range for quite a bit. It's not making that big of a difference if it drops an eighth or a quarter. But again, those people that are on the fence or 50-50, it's keeping them in the game because rates are not as volatile as they've been in the past couple of years.
Right.
I think the interesting thing right now is those clients who they started at a rate of 7% or 6.875, and now it's 6.5, And the conversation is, do we lock or do we wait and see if it goes lower? So we're having interesting conversations there. And a lot of it depends on timing. You know, if you're dealing with a co-op and you have no clue how long the co-op board is going to take to approve you, or if you're waiting on the your seller, the property that you're buying, the seller needs to buy something else, and that gets pushed back. Now, you may not be able to lock in a rate. So those clients who are floating, meaning the rate's not locked in, they're breathing a little bit easier now than they have in, you know, let's say earlier in January, February.
Because the clock's not ticking in that same way.
Correct. We're not, you know, holding our breath when we wake up in the morning thinking like, I wonder where rates are going to be, because it's been a little bit more, it's been steady. We still have that PTSD, so we still think that, but what we're conveying to our clients is we're not in a rush right now to lock anything in. The trend is in our favor. We can ride this wave for as long as we can, but some people are a little bit more conservative. Okay. They want to take their gains. Their rate dropped 0.5%. Let's lock that in. I'm comfortable with that payment. Still thinking that in the next year or so, they should be able to refinance.
Well, I get people, you know, asking me, should I lock in or wait? And what I always ask them is, well, what's going to upset you more? And what's more likely to happen? Is it going to upset you more if you lock in and the rate goes lower, or if you don't lock in and the rate goes higher?
Correct.
You know, deal with that and just understand. And nobody now I don't know if you do this, but like, let's say when the jobs report comes out or inflation, when I see that come through, I'm like, oh man, it just ruins my day if it's bad. Mm-hmm. Does that happen to you when you check rates? You go, or you're just so loan daddy mode that you're like, today's going to be a great day.
If we were so focused,
don't you hate when people smile and like are happy all the time?
I'll try to. Oh, I think Shar smiles a lot more than I do.
He does.
Shar's a happy guy. Look, if you're in our business and your mood is going to be dependent upon the rates, you're not going to have a long career in this business. It's just rates change a couple times a day. You can't focus on it. But the most important thing, the thing that would eat me alive, is when we're not communicating to our clients. So let's say up front we told the client, hey, we're starting at a rate of 6.875, and then we don't communicate with that client for 4 weeks, and now the rate's at 7.5. It's like, no one told me. Yeah. That's a problem. But you know, we have systems in place. We're communicating with all of our clients. They're fully aware of where they are in the process, where the rate is, what's happening with rates. As long as we're communicating, then they know we can't control the market. If we could control rates, this podcast would be on my yacht right now. It'd be very, very different.
You wouldn't have us on your yacht. Come on. You don't invite us anywhere anyway.
Greg, you'd be on, I'm invited. You're telling me I wouldn't invite you after I just invited you.
No, but that's
on my theoretical yacht.
Right, exactly. It's like, okay, Scott, you can come on my yacht when I have one.
It's
I'm
an
never going to
invitation?
have one, so it's not real. You know, we barely even get invited to Nick's watch party. I mean, come on, what's going on here?
Man, all right, I'm going to add you to my calendar. You're going to be aware of every all my whereabouts.
I can't keep track of that. We need an app to do it. The Where's Loan Daddy app. We can find them. And we see if you really go to the gym that much.
Coming soon.
Well, yes. All right, so...
Bring Greg to Mr. Purple.
Yeah.
What now?
Mr. Purple. You should come.
What is it, Mr. Purple?
It's like a bar club. There was a...
So I hear club, I get scared.
What's that?
If I hear club, I get scared. Because then I think Pac-Man Jones is going to show up and there's going to be problems.
It's a classy establishment.
Okay. Yeah, when does it get kicking around there, Lena? What time?
A nice sunset spot.
Mm-hmm.
Okay, well, I can deal with sunsets.
There you go. Yeah.
I can't deal with sunrise spots, but sunset spots, maybe that might work. All right, we got one more thing here. I saw this. I thought of Loan Daddy immediately.
When do you not think of
most of the rest of the day? I don't think.
Okay.
But you got that hat on my table in the office. So I just keep saying like, Loan Daddy hat. I'm still waiting for my moniker and hat, but who knows if it'll ever come.
The Econ Daddy?
Econo Daddy. That might be.
Daddy, okay.
That might be one. But we have no money in the budget for that. We spent it all on bobbleheads.
Where's the investment?
We have to have the three wise men here.
Yeah,
I mean, come
we
on.
do.
All right, so the administration wants to count crypto as a federal mortgage asset. FHFA, it's better than saying Federal Housing Finance Agency, is working to let borrowers use crypto as part of their mortgage applications without having to convert it. I know this is just a new concept, but you got any feelings on this?
Yeah, I mean, every client I've spoken to in the last 5 years who's under 40, when we go over their assets, they mention crypto. And then oftentimes there's not that much that we could do with it until they convert that into cash. The way that lenders look at investment accounts, brokerage accounts, so if you have a stock account, let's say, we're recognizing 70% of that stock account. So
because
if you have
it could go down by the time.
It could go up. So if you have $100,000 in stocks, we're recognizing $70,000 of that.
Okay.
Retirement is 60%. So how are they going to look at crypto? We don't know yet, but it could be probably in that 50 to 60% range, where if you have $100,000 in a crypto account, we're going to recognize $50,000 of that as part of your assets. So yeah, I think this is certainly going to help a lot of people.
Well, and it is something that is traded on an open market, so the value is known, right? I for years I kept hearing how everybody was going to buy homes with crypto. They weren't going to use dollars anymore. So that's ridiculous, and it hasn't really happened to those extent. But this could be, I hate to say game changer, but it could be a game changer.
Yeah, it's going to help a lot of people.
Well, that's good.
Yeah, for sure.
And we need as many.
Most guidelines that come out do not help us. So this is one that is in our favor.
Okay. And I guess you feel okay about it? You don't think it's a risky proposition? I mean, any investment can go up or down. I mean, that's just the nature of things.
I think, look, we still don't have a long enough timeline for crypto, but to your point, it's traded on the open market. There's a lot of demand for it. You have the major banks who are trading it. So, I mean, there's risk with most things that we do. I think in the mortgage business, guidelines are very strict. And this is something that if they feel that it's moving in the wrong direction, guidelines can change very, very quickly. So I think it's worth a shot. Well,
yeah, finally, a positive thing coming into this.
We like to end on a positive note.
And we're just going to do that very thing. Plus, we're out of material anyway, But
you're never out of material. Greg.
No, it's crazy time. It's the end of the quarter. Reports got to go out. There's other things people are worried about. So I just have to move from one thing to the next.
July is tomorrow.
Write one report. Yeah. Forget about that report. Write 3, 4 more of them. Do this, that. It's a day in the life of an economist. Doesn't it make everybody want to be one? No. My son has assured me he will not be an economist.
He's ruled that out.
Well, I said we got to diversify the family anyway. We don't want to be in the same profession.
That's true.
Well, he might just take my job. Who knows? He's got hair. That might be the deciding factor. But it's another show. This was our 70th podcast.
Well, it's actually season 2, episode
20 something or other. 22.
22,
but 70 is a round number.
70 is a good number. Yeah.
I do go back and watch the early ones every now and then. When Ray was this big, and it's interesting. It's still me running my mouth for most of the time. But
out of the 70 shows, is there one or two that really stick out to you?
Yeah, the one with my son and his cousins was really fun, I thought, until they started making fun of me, especially little Maggie, talking about how I sleep all the time. But that was funny having them on, and they enjoyed it. And the one with my guitar teacher was fun. Yeah. Because he thought he was just going to play a couple numbers with me, but, I actually brought him in and we talked about the economy. We talked about the gigging economy. So, and I just saw him. He moved to Ohio, and he's in now for a couple of weeks. So I got to play with him last night.
And that was actually the first episode that I heard also.
Say.
It was a great episode, and I was like, I think I could do this.
Yeah, no, it's if Greg can do it, who can't do a podcast? Everybody gets one now. It's like Oprah's here. You get a podcast. You get a podcast.
Yeah, but not everyone has a successful podcast.
And here on the Find More Network, we have many, many great podcasts to choose from. But choose mine. But there are many to choose from.
By the way, we missed you at the Crave Fish Bar last week. I heard it was on your card, though. But we had a great time. You were invited. I was also invited. I went. You were a no-show.
I couldn't because I had plans with my son to see a band.
Wow. And we didn't get that invite.
No, I purposely did not. Because you would trek all the way to Long Island. You'd be like, this is a bar with 2 guys playing.
I've been to Long Island before. I know. I know what to expect.
You just head east and you find it.
Yeah.
But I didn't think it was a loan daddy type thing. If you're going to come into Long Island, then bring a lot of people to a gig I play.
Yeah.
You know, that would be more worthwhile to me, because
I've actually been thinking about that. I do want to see you.
Because when you go to
perform.
a restaurant owner or manager and say you play and you'd like a gig there, they don't ask you how well you play or what you play. The only question they ask is how many people do you bring?
Oh, okay.
Like you have to. They don't even care what they pay you.
Yeah.
How many people are you going to bring? It's like, is there a minimum? Like, do you think? And then, you know, the musicians will say, what, you don't have customers now? So this is the struggle in the gigging business. And
I'll bring 20 people.
Okay, get a bus. Loan Daddy bus. A Loan Daddy bus. That's it. They'll probably all drink on the bus ride out. And then,
right, we won't need to drink it.
You'll get thrown out of wherever I'm playing.
Exactly.
No, you know, one of these days, it's, you know, working here and knowing so many agents as I do, so many people say, well, I totally come to your shows if you gigged in Manhattan. I'm like, I'm not dragging the stuff into Manhattan, sorry. I don't have a lot of equipment, but the people I play with tend to.
Yeah.
PA systems, you know, you got to drive in.
Yeah, I gotcha.
So, but we'll have you sing a song. Maybe get Ray and Lena to do a duet. They've been dying.
I'm ready.
Oh, yeah.
They were dying to, or we write a song about the podcast and we just debut it. And people go, you have a podcast? You know, that old joke, I never miss your podcast. I don't watch it. That's why I never miss it.
Right, right.
Anyhow, on a happy note, thanks to Loan Daddy as always, and Ray and Lena, and again for all our viewers and listeners out there. And go to our pages and check out all the great podcasts on the More Network. And have a fantastic week and a happy 4th of July.